Afternoon, everyone. Welcome to class number 5. I've just started recording this session. The recordings will be sent after class as soon as they are available. Let me start with the announcement or some admin test. So you will know that in other courses you've written test this week or you're going to write next week. For Financial Accounting 3, you're also going to write a test, but the test will cover 2 topics. The topic that we're busy with, changes in accounting policy, as well as the next topic, borrowing cost. The next topic, we're going to start with it next week. So now the question is the test going to be written online? Yes, the test is going to be written online based on the 2 topics. The date of the test is not yet set, so we'll let you know when you're going to write the test. But what is important is that it's going to cover 2 topics: change in accounting policy, the topic that we're busy with, and the topic that we are finalizing today. Today is the last time we're dealing with change in accounting policy. Next week on Monday, we'll be starting with a new topic, which is borrowing cost. And once we're done with borrowing cost, you will write your first test or first assessment, which is going to be online. For those of you who haven't visited my tutor, the question banks, the videos have been uploaded, even additional questions with solutions regarding changing accounting policy has been uploaded. So please go and visit my tutor. You will get more information regarding this topic that we're busy with. If you have any question or you want me to repeat anything during the class, you're more than welcome to type it on the chat. I'll check the chat from time to time. And the other thing I want to mention is size for changes in accounting policy. So I've sent the link together with the question bank that we're going to look at it today, which is class example number 1, relating to prior period or errors. That's what we're going to look at. And I believe this will be quick because even on Monday, we look at the principles of errors. We also did one of the questions. So this will just be one additional question that we're going to look at it and also go through the principles again as we go through the question. I'm not sure if you guys, you are able to see what I've just shared with you. Just type on the chat for indication. I just want to see if you're able to see what I've shared. Otherwise, I'll have to reshare it again before we start. Can I get an indication whether what I've shared with you guys, you can see it or not? Just type on the chat there. I'll be able to see whether you can see what I've shared or not. I'm not getting any indication whether you can see what I've shared or not. Just type on the chat there. I'll be able to see it, whether you can see what I'm sharing or not. So maybe the question is, which question bank are we using? The question bank we're using is the one that I've sent through the class reps, and it's also available on my tutor. If you go to my tutor, content 2020, under the folder changes in accounting policy, you should be able to get the correction of errors or prior period errors question bank. Once again, I'm still asking, can you guys see what I've shared before we start? I just need an indication so that we can start. All right, I'm not getting any indication. I'm not sure whether you can hear me or not. I'm not getting any indication, guys. Can you see what I'm sharing or not? Just let me know. Okay, I'm going to open your mics. Maybe if you can go through your mics. Hello, can you guys see what I'm sharing or not? You can use the mic. No one is responding. Okay, let me just select one. Estrala, can you see what I'm sharing or not? Hello? I see.
Yes, you can only see like the first page of your presentation.
Can you see what I'm sharing on the page? All right, thank you. Then we're going to continue. Thank you for that. All right. As I've indicated, today is our last day dealing with changes in accounting policy, estimated errors, and the focus of the class example for today, it will be based on errors. And on Monday this week, we looked at errors. So we shouldn't spend much of the time in errors, but nevertheless, we'll go through example 1 and see as to what is required of us and what is the best way of approaching it and how to apply the principles that we've learned up to so far. All right. So just a catch up or recap of what we did. What is it you will be expected to know or to do when it comes to the errors? You should be able to prepare the statement of profit and loss and other comprehensive income, statement of changes in equity. Also, you should be able to disclose the note with regard to correction of error. Last but not least, you are going to be expected to prepare the journals. I think on Monday I'll look at the journals as a way of calculations, but one of the requirements that you are going to be expected to prepare is to prepare the journals. I'm going to show you how easy it is to prepare the journals. Normally, when I do most of the stuff in accounting, my calculation is journals because journals talks to me. I'll show you what do I mean by that in today's class example. It is just that in today's class example, you will see when we go to it, journals are required as well. All right. Errors. What are errors? So errors are omission or misstatement that normally are discovered during the current financial year based on prior years, or something that has happened during this year and we can correct it. So in terms of the International Accounting Standard number 8, it states that when you have material errors, you must correct it. You must correct it. So as an accountant, as a preparer of financial statement, or as an auditor, you will be expected to know that if there's an error, what needs to happen in accounting? You need to correct them. Accounting for errors, errors are accounted for retrospectively, unless if it is not possible. So what does that mean? If an error has occurred in 2017, we must go back to 2017 books and correct that error. That's what it means. So what about if an error has occurred in 2019? Yes, we must correct that current year. That is easier. But if that error affects 2019, 2018, and 2017, you must go and correct those prior financial statements. If it is not possible to correct the error, you must indicate as such. In other words, we won't have information. Let's say, for example, you identify that there's an error in 2019, but this error, you know that it started in 2016, but you don't have the information. So you just need to go and correct what you have information on. If it's not possible, indicate that it is impracticable to do so. All right, continue with errors. Prior period errors. There are errors that are immaterial and there are errors that are material. Errors that are material, you must correct them and disclose them. But errors that are immaterial, you must adjust them, but doesn't necessarily need the disclosures. No disclosure is required for immaterial errors, but for material errors, disclosure is needed because the users of the financial statement want to know what happened. Materiality, those who are doing auditing, I think, but you know what is materiality, right? Materiality may differ from company to company. In a company like Shoprite, which make billions, if there's an error of 10,000, they might say that is immaterial. But in a small company, which is that starting 10,000 might be material. So you know it is very subjective when it comes to the issue of materiality, right? But normally in a question will tell you whether this error is material or not. This error is material or not. But the key issue here is the difference between material and immaterial error is that the material error needs to be disclosed. In other words, we expect to see the note of that. But if it is immaterial, no note, you just adjust your financials, normally a statement of profit and loss if it's affected, as well as the statement of financial position. So those of you who does auditing or who have the knowledge, you can see that there's a relationship between accounting and auditing. I keep on saying that you can't audit the financial, you can't be an auditor of the financial statement and not knowing the principles of accounting. Then you won't be able to audit it properly. Disclosure, once again, you must disclose the nature of the error. So you just need to state what happened. And this information will be provided to you in a question. What happened? So when you require to disclose a note, please disclose what is the nature of error, what transpires, what the error is all about, the amount of correction. In other words, here you need to state is to say, with this error, what will be the effect normally in the statement of financial position or statement of profit and loss? You need to indicate that. All right, having said that, let's look at example number 1. This example number 1 on errors, as I've indicated, it is the document that I've sent through the class rep, and it is also there on my tutor. So this information is readily available. After the class, these slides, if it is needed, I'm going to send it through the class rep, because this is where I just did the calculations, which some of the calculations are not here on the solution. So I'm going to send this after the class. So, but I just took the question as it is. As a norm, first thing first, let's look at the required, what is required. So there are 4 required in this class example. Required number 1, they want us to prepare the statement of comprehensive income. Required number 2, statement of changes in equity. Required number 3, disclosure note relating to correction of error. The last required, they want us to prepare the journal entries. So when you read and say prepare the journal entries, now the question is, this question is silent. Do I prepare income tax or tax journals? Yes, if the question is silent and income tax is applicable in a question, you must prepare also income tax journal, because if you just go and process the journals and don't do income tax journal, you're going to lose a lot of marks unless specifically stated. Let's say the question read as follows: prepare the journals for the year ended 31st December 2010, and then exclude journals relating to tax. Then you know that you don't need to deal with the tax part of it on the journals. But if the question is silent, then you must prepare all the journals applicable to the scenario. More importantly, in the bold letters there, show all calculations, comparative figures are required. Very important. I keep on stressing that showing all calculation means that in a question there will be marks allocated for calculations. And calculations, whether you do them separately or you do them on the face, for example, when you're preparing the statement of comprehensive income, it doesn't matter as long as we can see the calculations and number your calculation properly. Because if you just say calculations and required number 1, you need to calculate depreciation, and required number 4, we need to calculate depreciation, and you don't indicate which depreciation is it, because you may find that it's depreciation for various assets. So if you just say depreciation and there's land, there's building, there's vehicle, there's equipment, then whoever is marking is going to give you, not going to award you any marks, because then you are giving whoever is marking, say, go and select which depreciation is it. So do yourself a favor and make sure and say, if there are various assets that requires depreciation, you must indicate it clearly. Here I'm calculating the depreciation for building. Here I'm calculating the depreciation for equipment. Then it becomes clear as to how your calculation you're doing them. But if you just say depreciation and you put them all of them there, when we're marking, we're not going to give you any mark, even if you calculate it correctly, because you want me to select. So show all the calculations, make sure your calculations are clear. I can see what you're calculating here. All right, so now let's go and look at the information provided. This is the norm for all the changes in accounting policy. They give us the statement of comprehensive income, and they give us turnover until total profit or profit for the period, and comprehensive income. So I won't go much in detail with regard to this. I will explain it later on. Additional information, this is where we're going to spend more time, or where the detailed information is. Other expenses included the following. So we are given information for 2009 and 2010. Admin expenses, distribution cost, insurance premiums, and last, depreciation. The next additional information, which read as follows: during the 2010 financial year, it was discovered that an investment purchased in 2009 for 40,000 was incorrectly recorded as distribution cost. The error is material and is not yet corrected. This is what I was talking about. We'll tell you whether this error is material or non-material. This one is material. So just looking at this additional information, as I've indicated in the previous classes, that when it comes to errors, it is very important for us to understand as to what happened. In other words, what has been processed now and what is that is required of us to correct. So correction of error, in other words, it means me and you who are the preparer of financial statement, when we identify an error, we need to correct it. Like in this case, they say they discovered when now in 2010, they discovered there was an investment that was purchased in 2009 for 40,000. But this investment was incorrectly recorded as a distribution cost, and the error is material and is not yet recorded. So first thing first, we're going to go through the analysis and the calculations, and then we talk about, but on a high level, what happened here? We have an investment. You need to ask yourself, it's investment recorded on the statement of financial position or statement of profit and loss? That's the first question you need to ask yourself. And what about distribution cost? Is it recorded on the statement of profit and loss or statement of financial position? So in other words, what they're telling us here is, instead of us recording investment, we recorded distribution cost. So we need to correct that. Me and you as the accountant, now we know how to process the transactions. The transactions in accounting are processed in the form of journals normally. That's why from time to time, you'll be required to prepare the journals. So the starting point, which will go in detail in this transaction, now we identify that investment was supposed to be processed, but we processed distribution cost. All right, so we'll go in detail, we'll analyze the transaction in the coming slides. The next transaction, very important as well, included in other expenses. Here's the other expenses here. Is an incorrect amount of 45,000 for insurance premiums that should have been 30,000. The error was detected by the auditors. So, in other words, we have recorded 45,000 as an insurance premium, but the correct amount was supposed to be 30,000. So this is the error. Who detected this? The auditors. So the auditors have been very useful. Even if it's not the errors, it could be, it's not the auditors. Sometimes it could be the people, the management, when they're reviewing the financials before they send it for audit, that no, there's an error that we made. Here, other expenses include the amount of 45,000 for insurance premiums that was supposed to be 30,000. So we'll also analyze this transaction. What happened here? Insurance premium was supposed to be 30,000, now it's 45,000. So automatically I can tell you that we're going to decrease our insurance premium. And insurance premium is an expense. All right, so when you pay insurance, let's say it's assurance and you pay the invoice. So the journal that you're going to pass here is you're going to credit your bank with the amount that you paid and debit insurance. So we're just going to see what was processed and how to correct it. Dividends declared 2010, 20,000, 2009, 10,000, and taxation is at 30%. The moment I see dividends and I've been asked to prepare the statement of changes in equity, you just need to know where you're going to disclose it. Whether it's paid or declared for dividends, you must recognize it in the financial statement, and it goes on the statement of changes in equity. The next additional information, closing retained earnings for the current year amounting to 2,895,000. Okay, great. They gave us the closing retained earnings. So in other words, we must go and calculate the opening balance of retained earnings. This is what we'll start with. This is the easiest part. And once we get it right, then we'll be able to proceed with a statement of changes in equity. So it is very important to determine what are you given when it comes to retained earnings. We're given closing. That means that it's on the 31st of December 2010, we're given this amount. So we need to go and determine what was the opening. I'll show you that. If you know the formula, that will be easy to calculate. Lastly, on the additional information, they say SARS agreed to reopen previous assessment for any changes due to material error. Deferred tax is provided on a comprehensive basis. In this case, except on the journals, we're not required to prepare any tax except on the journals. So again, on the required, statement of comprehensive income required, statement of changes in equity required, disclosure and correction of error, the journal's interest is required. So I want us to start with calculating the retained earnings. You must know this structure by heart. For example, in order for you to calculate the retained earnings, you need your opening balance of retained earnings, and you add your profit for the year. Then you less your dividends, you will have the closing balance. So in this case, we just need to solve for X. What is provided to us, I can tell you now, on 2010, this is the amount that is given, 2,895,000. It's given on the additional information. Dividends, 20,000, it is given as well. Profit for the year, it is given. Where do you get it? You get it on the statement of comprehensive income that is provided. So these three line items, closing balance, dividends, and profit for the year, it is provided. As I've indicated that the one here's the how do I calculate that? This amount highlighted here in yellow, it is not given. So if I take my 2 million thousand and I add my dividends and earnings as previously stated. So it was not provided. We needed to calculate. Is 1,760,000. So what if this is a dividends is given, profit for the year is given, you know to get it. Then I can calculate my opening for 300,000. Given the opening balance, which means you need to calculate the closing balance. But if you know the format or the structure to solve, you will be solving for X. You will be solving for X. All right, great. So now let's go to the great deal now, to the real issue of these errors, especially the one that they said is material, but the immaterial one will also look at it. So what is the issue there on that additional information regarding investment? So there was an error that was discovered during the year. We can all agree with that. And an error is relating to an investment that was purchased in 2009 for 40,000, but incorrectly recorded as a distribution cost. Now we need to ask ourselves, what is the impact on distribution cost? Is it going to increase or decrease our distribution cost? And is our distribution cost recorded on the statement of profit and loss or statement of financial position? Definitely, distribution cost is a cost, it's an expense. It is recorded on the statement of profit and loss. Now we need to determine, is it going to decrease or increase? If it's incorrectly recorded on distribution cost, our distribution cost is going to decrease. Distribution cost is an expense. When expenses decreases, what happened to our tax? Our tax increases and our profit increases. We'll look at that when we look at the note. Now, what is going to happen to investment? Is it going to increase or decrease? I can tell you now that the investment is going to increase. It's investment recorded in the statement of profit and loss or statement of financial position. Investment is recorded in the statement of financial position under assets. Now, let us look at what happened. What are the journals currently processed? Right? They're telling us that investment was purchased to the value of 40,000 in 2009, but when it was recorded as a distribution cost. In order to record that transaction, that means distribution cost was debited by the amount of 40,000. And when we pay for that investment, which we recognize as distribution cost, we credited bank at 40,000. This is the current journal that has been processed in the financials of this company. They want us to correct that journal. So the next journal, which at the same time will be responding to requirement number 4, because in requirement number 4, we are required to prepare the journal entries. So in order to correct that, distribution cost was incorrectly recorded, we need to credit distribution cost or retained earnings. Now the question is, why are we talking about retained earnings? This has occurred in 2009. So this is how financial statement works. When we're preparing the books of 2009, we calculated everything from revenue until profit. And the profit we got, we transfer it to retained earnings, profit or loss. That's why we're talking about retained earnings. So when you close the books, you no longer have revenue and distribution costs, you only have retained earnings, because the profit that has been transferred to retained earnings, it includes distribution cost. Hence, we're talking about crediting retained earnings. In other words, we're going to reduce our distribution cost. When we do that, we are also reducing our retained earnings by 40,000. And the corresponding account now, we are debiting our investment. This is the correct journal. We're supposed to debit investment, credit distribution cost, because we have incorrectly dealt with it here. The bank is not going to be affected. It has been processed correctly. 40,000 investment debit, credit distribution cost 40,000. Now we need to ask ourselves, what is the income tax implications of this? Right? We're going to debit our income tax expense. We'll take 40,000 multiplied by 30%, it will give us 12,000. And because investment has been debited, we're going to credit our deferred tax at 12,000. So this is the journals we expect to see in the solution in terms of required number 4 relating to distribution cost. So I'll quickly go to the solution and show you that journal that we just spoke about it. We're using it as a calculations on the other side, but here's the journal. So on 31st December 2010, investment debited 40,000, retained earnings credited 40,000, income tax expense 12,000, deferred tax 12,000. This is the journal required. It is what we called a correcting journal because we are correcting an error. I hope we're still together so far. We are progressing very well, and in no time we'll be done. So this is the journals that I was talking about. So now let us go and look at how will our statement of profit and loss be affected, right? So if you go to other expenses, it says we have distribution cost of 100,000 2010, 100,000 2009, and we need to correct error. The error occurred in 2009, so that 40,000 needs to be reduced in 2009. So the distribution cost for 2009 will be 60,000, and for 2010 it will be 100,000. So if you go to the statement of profit and loss, we must see 60,000 in 2009 and 100,000 in 2010 because we just did the correction. All right, investment. Let's go and look at the investment. In 2010, there was no error. The error occurred in 2009. So in other words, our investment is going to increase by 40,000. If investment increases because it's an asset, then our SARS, the tax that we're going to pay, is going to increase by 12,000, and our retained earnings is going to increase by 28,000 as well. So that is transaction number 1. So I want us to go and look at how this information is disclosed in the note. So we're going to go to requirement number 3 and check how all this, everything that we spoke about it, we should be able to see it reflected on the note. So if I quickly go to required number 3, which is the note here. First thing first, what is important here? It is the nature. What happened? Investment incorrectly recorded as a distribution cost. Very important. That is the nature. What is the effect now of this correction? Let's start with the effect when it comes to the statement of comprehensive income, right? We all agree that our distribution cost is going to decrease by 40,000. If that happens, our tax expense is going to increase by 12,000. And when tax expense increases and distribution expense decreases, our profit is going to increase by 28,000. That is the effect on the statement of comprehensive income when it comes to the disclosure. Now, what is the impact here on the statement of financial position? Investment is an asset, therefore it's going to increase investment. We spoke about that. When investment increases, then also the tax liability, which is the receiver of revenue, is going to increase by 12,000, and our retained earnings is going to increase by 20,000. This retained earnings increase by 20,000 in 2009. We should be able to see it reflected on the statement of changes in equity. So if I come to the statement of changes in equity, correction of error relating to that investment, 28,000. In other words, our retained earnings is increasing. So this part, I just spoke about it. This part I've explained. This part I've explained. So it is easier to deal with these statements by dealing with the calculations. As you're done with the calculation, you should know the impact on the statement of changes in equity, the impact on the note, the impact on the statement of profit and loss, which I haven't looked at that. I'm going to look at that now. All right. Let's proceed. We dealt with this issue, or regarding the investment. And here are the journals that we spoke about it, and these journals have an impact on the disclosure, on the note, statement of changes in equity, statement of profit and loss. Distribution cost, this information will go to the statement of profit and loss. I'm going to show it now in the next slides. Investment, this is what has been reflected in the disclosure note. Now, before I speak about the statement of profit and loss, let's talk about this issue now. Insurance premium. Error was discovered during the year. Incorrect amount of insurance premium included in other expenses. Included amount is 45,000. The correct amount is 30,000. You can see that there's a 15,000 different, the amount that we need to adjust. And what does that mean? It means that our insurance premium needs to be decreased by 15,000. This is the next question. Is insurance premium an expense or an asset? It is an expense, right? So think about it. When assurance debit our account, or we pay it, come month end, we say we're paying for our insurance premium, for example. The amount that we're supposed to pay was 30,000. In other words, the correct journal that we're supposed to process, we're going to debit insurance premium, credit back because money is out of our account. But what has happened here, we recognize 45,000 instead of 30,000. So we in our books, we recorded more by 15,000. So in order for us to correct that, we need to pass the journals. So it's going to be explained here. So current journal processed. In other words, what has been recorded at the moment in our books is debit, insurance premium, credit bank, value 45,000. We need to correct that. As I've indicated, the difference is 15,000. the difference is 15,000. So if the difference is 15,000, then that means then we must correct it by crediting insurance premium to the value of 15,000 and debiting bank, because that means we've overstated our insurance as well as bank. And now the question is, what is the impact on the tax? Right? Bank statement of financial position, that means deferred tax will be credited by 4.5. How do we determine 4.5? 15,000 multiplied by 30%. It's going to give us 4.5. Then the other impact is going to increase our income tax expense. That's how we correct it. This is the journal you must see in required number 4. This is the journal that you must see in required number 4. Then retained earnings, we spoke about it. Other expenses, I'm going to explain now. Tax expense, I want to explain tax expense first. The amount that is given is 495,000 and 630,000. This amount is given. Now, if you look at distribution cost, if I go to the journals that we processed regarding distribution cost, my tax is increasing by 12,000. Let me quickly go to that journal so that you can see where the 12,000 is from. If I come here, my income tax is being debited, and income tax is an expense. It's going to be debited by 12,000. That's why we're increasing it by 12,000 here. That's why we're increasing by 12,000. Correction of error, insurance premium, it's also increasing our tax expense by 4.5. We just dealt with it now. Here's the 4.5. My income tax expense is increasing. So when you go to the statement of profit and loss, you must see the income tax expense. 2010, it should be 499,500, and 2009, 642,000. Let me go to required number 1. Here's the income tax expense. Calculation number 5, 499,500, 642,000. That's where it's disclosed. Now the question is, I did the calculation separately and indicated that it's in calculation number 5. It's up to you. You can even do the calculations on the face. You can do the calculation on the face, like what has been done here. If there are marks awarded for calculation, you're going to be awarded. It doesn't matter where you do it. But I just wanted to show this calculation comes to income tax expense as to how do we calculate it. It was the impact on the investment and the impact on the insurance premium. All right, so we're almost done with our calculations. I just want to explain here. So if you look at the statement of profit and loss that we're given, you will see that our income and expenditures are classified. And in terms of the International Accounting Standard number 1, it says you can classify income and expenditure when it comes to the statement of profit and loss, either using the function or the nature. Very important. All right, so you must know. So this is what I did, the function. So if you see the statement of profit and loss disclosed in this fashion, you must know that they've used the function. In other words, revenue less cost of sales equals to gross profit, and then you less distribution cost, you less admin expenses, you less other expenses, you less finance cost, then you have profit before tax, then you have income tax expense and profit for the period. This is the function. Now, the nature, this is normally what is provided. Revenue less cost of sales equals to gross profit, add other income, less other expenses, less finance cost, profit before tax, income tax expense, profit for the, this is the nature. So now let's look at this information provided to us here. So if I look at this statement of profit and loss, and I just look at this side, I can tell you that here we have used the nature. turnover, cost of sales, gross profit, other expenses, income tax expense. We've used the nature. But if you go down here to the other expenses, you can see that the other expenses have been given to us using the function. So when you go to the solution of this question, you will see that the function was used in order to disclose it. What led us to use the function is these line items: admin expenses, distribution cost. Then it tells us that we can use the function as it is. So if I come here to the solution of the statement of